Right, so thank you very much. I think mine would be generalist. We've had very good technical information about security. Indeed, that's one of the foremost challenges when you're talking about digital transformation in the banking sector. So my presentation is outlined that way. I think this comes from my teaching and lecturing background, but we shall skip right into the text. As we are aware, the COVID-19 pandemic is a watershed moment in our history. And so there are crises in health, in the social and economic spheres. And so we are questioning the resilience of our society. So the movement restrictions have meant that digital solutions like telecommuting and on-demand delivery of products have grown. Okay. The gig economy has also grown. Social distancing requirements, lockdowns, and working from home have led to e-commerce, scheduling of service provision, and innovation to allow remote service provision. In the banking sector, we have several technologies that have come with the fourth industrial revolution that allow for digitization, including blockchain, Internet of Things, the virtual reality, and cloud computing. Okay. So COVID-19 and banking sector digitization. We are aware of the evolution of payment systems. We have more efficient and convenient fund transfers, but these have come with risks. Here in Kenya, the year 2007, we started the M-Pesa, and this has revolutionized our banking. The legal framework has been set in place. We have the National Payments Systems Act from 2011, which was followed by the East African Payment System in 2014. Also to support digitization, we have the Proceeds of Crime and Anti-Money Laundering Act, the Data Protection Act, and the Computer Misuse and Cybercrimes Act. It is important to note that 50% of the payments that were transacted in Kenya went through mobile electronic payments, as opposed to only 15% that were done through the banking cards and electronic funds transfers. We also have a national safety net program. This one for accountability and wide reach throughout the country was able to use the mobile banking platforms to be able to deliver cash handouts to those who are vulnerable. Initially, the mobile payments were for person-to-person transfer, and more so urban to rural transfer of funds. But there's been an evolution now, and we see bill and utility payments, purchases, remuneration, and even social welfare disbursements going on the mobile technology platforms. And through partnerships with banks, we now have financial services being provided. And this includes the savings, the pensions, the insurance, and investments, up to and including the purchase of bonds being done through digital systems. The government has also encouraged digital banking and electronic banking through incorporation of tax and levy collection and refunds of payment through online channels. Here in Kenya, there's what we call the digital lenders. They have grown very exponentially because people need credit. Now, this has spawned collaboration and also competition between the banks and the fintechs who own the digital lending apps. Looking at Africa, according to African Banker, the African banks regard digital transformation as one of the most important factors in their growth strategy, and up to 96% look at it this way. Just slightly over half of the African banks consider better client services to be the single most important priority for digital transformation, while up to 2/3 of the African banks plan to increase their digital transformation expenditure over the next year for retail banking. Still sticking with Africa, the adoption of mobile and agency banking has led to the reduction in branches and employees, but the banks have gotten new revenue streams as they expand the service channels. There's also the aspect of cost optimization. Since maintaining a branch is very expensive, so we find that mobile and agent banking is much cheaper. Looking at the global scene, 60% of the world's mobile money pass through African-based and led payment platforms. We have Nigeria, Cameroon, Egypt, and South Africa as having e-signatures and electronic authentication of official documents. This has always been seen as one of the impediments to going full-blast digital transaction in the banking arena. Further afield in the Seychelles, we have the island nation positioning itself as a global crypto hub. The adoption of cryptocurrency has been lagging behind in Africa, and this would give a boost to digital banking or digitization of banking, right? Only 12% of African banks identify themselves as digital-first banks, with almost half of the others in transition to be able to ensure that they are digital at the core. We have investment being very low. More than 1/3 of the adult African have smartphones, with 1 billion SIM connections expected by 2025. And so this is a very fertile market for digital banking. We have continental banks, mainly from South Africa, Kenya, and Nigeria. These are banks that have operations in several countries. While they have digital platforms, the challenge is that the regulation goes along the national lines. So they have to customize, and they have difficulties sometimes in deploying a digital channel that works very well in one country, in the other country. Another factor that will really promote the digital banking scene is the African Continental Free Trade Area that is just coming up right now. So when business will move from country to country, then it will be important to have banks that are able to operate across the borders in Africa. Okay. Given that background, there are several challenges in the digital banking space. First of all, we've talked about the limited and inequitable digital inclusion. And this means the high cost of connectivity and devices usually excludes the marginalized in society, the disabled, the urban and rural poor. So they are not able to join in the digital banking arena. We also have a challenge in Africa as far as stable power is concerned. And so the digital devices need to be powered so that we can be able to, connect to the core banking systems. I think the cyber insecurity, fraud, data breaches has been more than covered by the earlier speakers. This is still an issue, a big issue here in Africa with our nascent systems. We've talked about the digital signature systems. There's still strong push towards paper-based documentation. And so this means that even when you have a fairly digital system, you still have to go to an agent or go to the bank branch to be able to sign a document or two, or to be able to provide some paper-based document. There's the issue of the fight between the fintechs and the banks. The digital lenders are mainly unregulated. If we look at the example here in Kenya, the digital lenders don't come under the central bank, yet they provide money and they charge interest on them. So there's that fight between the digital lenders, the banks, and the central bank. So regulation in that area is still being developed. There's also the issue of the faster innovation compared to the regulatory framework. The innovators, the digital banking systems developers are much faster than the regulatory framework can be able to deal with. And so you find that this mismatch means that we may not be able to benefit from some of the innovations because there's no regulatory framework. Or there could be innovations that take advantage of the public because the regulatory framework is not there, allowing unscrupulous innovators to be able to, shortchange the public. The idea of inadequate budget set aside for the development of the digital systems cannot be overemphasized. Many of the banks did not take the ICT and the digitization very seriously. I think the COVID pandemic has been a blessing in disguise for many of the institutions in Africa, since they now see the need for proper digital systems, and this also applies to the banks. Many of the old banks were satisfied with the low level of customer service and had high number of customers who would walk to their branches. This is now changing. The other challenge is also having the properly trained personnel who would be able to run the digital setups. I think they are trying, but they need to put in more effort so that we have adequate manpower. Now, with the digitization will come more efficiencies and closure of bank branches. And this will mean redundancies and downscaling of the workforce. So looked at it from that angle, this is a challenge. And then in Africa, there's always the issue of rapport with the customer, where you have face-to-face dealings, where in some setups you provide tea, that setup needs to be reinvented, since with a digital setup, there is no face-to-face meeting with the customer. However, we need to be able to see how to go forward. Digital inclusion is supposed to be a national priority. And I think many of the African governments have arisen to this fact. We have cheaper or more affordable devices. In Kenya here, there's even a program where for $0.2 a day for a number of days, you are able to own a 4G phone. The government is also trying very hard to be able to bring connectivity through several sea cables to ensure that the price of internet connectivity goes down. Indeed, the government in itself is trying to reach each and every county and sub-county with internet connectivity. And through the Communications Authority, we have what we call the Universal Service Fund. And this is supposed to ensure that we have infrastructure for telecommunications and internet in marginalized areas or in areas where it wouldn't make commercial sense for the service providers to be able to put in the masts and the telecommunication devices. So this is supposed to bridge the digital divide. There's also the issue of the national awareness and education. There's a lot of fraud, and especially for gullible people who may not be very internet or computer literate. So they would be able to get maybe a message from an individual, but signed off as a service provider, and they would assume that this is the service provider trying to reach them, trying to ask them maybe for pins, or trying to ask them to, do something on their phone that would lead to fraud, loss of funds, and some other breach. Then the focus should be on reaching the unbanked and not cutting costs. Because when you reach the unbanked, then you'll find that your revenue will also grow. There's also the idea of the regulatory environment. As I've talked of the continental free trade area, there is need to be able to harmonize the regulatory environment, since we have many of the big banks going across borders, and they would need to use the same digital platform to serve different jurisdictions. There's also the issue of regulatory blind spots. And this is very clear here in Kenya, where we have digital lenders who do not have to follow the central bank regulations. So they charge very high interest rates. They harass contacts from the phones of the people they've lent money to if those people default, while these people who are being harassed were not guarantors as such, but because they're in the phone books of the defaulters, then they find that there's a lot of harassment, there's a lot of threats on behalf of the defaulter, or in a bid to try and get the defaulter to pay. One other area that should be able to assist in the adoption of digital banking is the adoption of cryptocurrencies. The African governments have been a bit slow in adopting, regulating, and licensing the cryptocurrencies. And I think there's still a lot of study and understudy going on. But in the private realm, individuals are already engaging in the cryptocurrencies. So this is one gray area that needs to be harmonized and regulated, and I'm sure it will push the digital banking even further.